So Chris, I'll turn it over
Great.
to you.
Great. Well, thank you so much, Whitney. It's great I was looking at the registration list today, and it's really great to see so many familiar names. As Whitney mentioned, my name's Chris James. I'm President and CEO of the National Center for American Indian Enterprise Development. We are headquartered in Phoenix, Arizona, which we have a beautiful over 100-degree temperature today and climbing. But we also have offices throughout the United States, 7 offices throughout the United States, and work very closely with many of your organizations, including the Native American Agriculture Fund. I'm really excited today to be talking about capital, specifically agriculture capital. And I'm joined today by my good friend, Jackson Brossy. He's the Executive Director of the Native CDFI Network. He is an enrolled member of the Navajo Nation and has a lot of experience in management, federal federal advocacy. Advocacy is a hard word, Jackson. Nonprofit management and private consulting. I'm also joined by Jason Lueders. He's Regional Vice President of CoBank. Jason leads CoBank's Minneapolis and Fargo Banking Center, and it's provided about $4 billion in financing to farm-owned cooperatives and other middle market and agriculture business across 5 upper Midwest states. And then lastly, I'm joined by Administrator Zach Ducheneaux from the Farm Service Agency. Zach was previously the Executive Director of Intertribal Agriculture Council, which is the largest, longest standing Native American agriculture organization in the United States. But in his present position, he is administrator of the Farm Service Agency. So thank you so much, gentlemen, for joining us today. And I'm very excited to see you all. I'm just going to ask a series of questions. Really, my first question to everybody, and we can start with Administrator Ducheneaux, is really tell us a little bit about your organization or agency that you work with and what services that you can provide, and just give you a brief overview of that. So we'll start with Zach.
Good afternoon, everybody, and thanks for having us here. The Farm Service Agency is probably the most farmer-facing aspect of the United States Department of Agriculture. We deal daily with millions of producers across the country, largely ag finance for those that can't secure credit elsewhere, safety net programs, disaster programs, also some conservation practices. The mission of the Farm Service Agency is really to provide the tools that the producers need to maintain their role as a vibrant part of rural economies, and to help provide that safety net to continue to provide a safe and affordable food source for our nation and the world.
And Administrator, how long have you been on board in that position?
I was appointed by the Biden administration on the 22nd of February. So I've been here just about 4.5 months.
Well, congratulations, and thank you so much for your service. That's a really big job you have up there, and it's great to see you on screen. We haven't seen each other in a while, but definitely a lot of us are cheering for that organization on the sidelines and looking forward to hearing more about it. Let's go over to Jason. Jason, maybe tell us a little bit about CoBank and some of the work you're doing.
Yeah, absolutely. Yes. So CoBank is the largest member of the Farm Credit System, and the Farm Credit System itself is a network of financial cooperatives with a mission to serve farmers and the businesses that serve farmers. So CoBank's specific role within that is that we focus in on farmer-owned ag co-ops, rural infrastructure providers, and other like businesses across the U.S. We provide about 120 billion of loans and leases and other financial services to those businesses. And I specifically lead in addition to, I'm going to say, a retail business for ag farmer-owned cooperatives across a few states in the upper Midwest. We also have a program called our Co-op Start program, where we provide loans to entities to farmer-owned co-ops that wouldn't otherwise qualify for traditional financing. So it's a really patient capital program that we have, and we've gotten to finance startup businesses that we wouldn't have otherwise. And so I work with that across the country.
Wonderful. Thank you so much, Jason. And lastly, let's go over to Jackson Brossy with the Native CDFI Network.
Yeah, thank you, Chris, and thank you to everybody here. I want to introduce myself in Navajo. I saw a bunch of my Navajo family folks on here, and I think even some in-laws here too. So I want to do that. I'm with the Native CDFI Network, and our mission is to be the national voice and advocate that strengthens and promotes Native community development, financial institutions, creating access to capital and resources for Native peoples. And so that's a lot. I was just talking with somebody else earlier today, and the way I like to frame it, if you're not familiar with CDFIs, which some folks are and some folks aren't, if you're not familiar, Native CDFIs are really nonprofit lenders or lenders that have a second bottom line. Even we even have a couple banks and a couple credit unions in our network, and even the banks that are for-profit still are owned by tribes, and therefore, in my view, for all practical matters, are also not-for-profit. So think of us as a Native not-for-profit lenders group. Our members are across 27 different states, and there are 69 Treasury certified Native CDFIs across the country, and about 15 what we call emerging CDFIs that are on their way to be certified by the Treasury. Our members do a lot of things. I think I'll talk a bit more about it, but I think our members do things that should be relevant to everybody here, whether you're a producer, whether you are a tribal government leader, whether you're a federal partner, whether you're a bank, and whether you're another nonprofit partner. I think our members do things where we can all help out and contribute and bring more ag development and strength to Indian country. So thank you.
Thank you, Jackson. And why don't we just start with you, since you sort of gave an overview of some of the CDFI work that you do. Do you have any specific examples, or maybe some of what CDFI are doing on the capital front, specifically around agriculture or cooperatives?
Awesome, great. So our members are doing a lot, and we're making, I'd argue, big time headway in the ag finance space. And I think this is a relatively new trend, a trend that is going to continue to grow. And it's also pushed forward by a lot of our partners like the Native American Ag Fund, who's really stepped in and allocated resources and helped these Native CDFIs that already have an engine to have a little more gas, a little more capital to lend. So we have some great examples. We might even have some of our members on today. So a member like Akitan is a new Native CDFI out in South Dakota that provides financing for ag producers across the country, primarily through loans. We have other members also in South Dakota, like Lakota funds, that also have and traditionally provide loans to other ag producers that haven't been able to qualify for a conventional loan, or otherwise our members might be able to get it at more, I think, long-term, more patient capital. And maybe this is something on the horizon, but I know there's also an interest in our members, maybe in some of the panelists, about going beyond just debt financing, but moving toward equity and investments to help have more long-term and more skin in and support our native ag producers. But so taking a step back, I said we bring something to the table for hopefully everybody here, whether you're an ag producer. And so if you're an ag producer, we encourage you to go to our website or the Treasury's CDFI website and look for native CDFI in your neighborhood. Like I said, there are 69 Treasury certified native CDFIs across the country and working in 27 different states. And hopefully there's somebody near you who has some expertise or might have some resources that could help you, whether first off would be lending, or alternatively, the native CDFIs, in order to be certified, must provide technical assistance. So basically training to make sure that hopefully that any business or any consumer has the financial tools and the education to be successful. So we encourage you to go there. If you are a tribal government leader and you're interested in learning more about it, we also encourage you to go to our website or the Treasury Fund and look at any CDFIs that might be near you, or talk with some folks about starting one up. Not to say that every single Native community needs a CDFI, but I think that a lot that do have them benefit from them and really appreciate them. Most Native CDFIs are 501c3 nonprofits, but about 20% or so are tribal, what we call 7871, IRC 7871, not-for-profit organizations run by their tribes. And if you're a bank, I'm going to get to you now. So if you are a bank, what Native CDFIs can do is Native CDFIs can give you some good, hopefully good relations, great stories, and way to connect with your regulators, whether they're the OCC or the Federal Reserve or the FDIC. If you invest in a Native CDFI and you do it correctly, you should be able to get Community Reinvestment Act credit, CRA credit, which should help you in your relationship with your banker, but also with your regulator. And ultimately, our members are able to get access to and finance projects that you might otherwise not be able to finance. And so that would be my my thing to add there for you. And if you're a federal government partner, we want you to connect with Native CDFIs. We also think that Native CDFIs can and should partner a bit more on a number of different projects. We wanted more partnership on things like the Paycheck Protection Program, PPP, but fortunately, some of our members, mostly our larger members, were able to help with getting folks PPP. But down the road, I think more federal partnership will result in better outcomes when the next PPP-like thing comes up. And finally, if you're not for profit, our members, like I said, are locally based, doing great things, and really can bring expertise, whether it is financial literacy education for ag producers, which I want to give a shout out to the same Muskogee Fund out in Oklahoma, or the Native 360 Loan Fund out in Nebraska. We partnered with them this past year to do a number of web-based trainings for Native ag producers, and you can find those on our website or their respective websites, and I think the Native American Ag Fund's website. So I will stop there, but overall, I think a ton of opportunities for partnership. So thank you.
Thank you, Jackson. And what's amazing about the CDFI network, and all of us on this panel are familiar with the CDFIs, is that they are often there when other financial institutions may not be. And there could be many reasons for that. It could be location, it could be other things, but a CDFI can step in times where maybe a piece of equipment breaks down and you need a very quick fix. CDFIs can be there in your community. So thank you for that overview, Jackson. Moving down over to Jason, and I know you sort of gave an overview of a lot of the activity CoBank does, but I know that oftentimes marketing of agriculture products can often be challenging for those who just aren't connected to regular market support. Can you talk a little bit from your experience on how important marketing in cooperatives are right now for all producers?
Yeah, absolutely. I'll try. That's a good lead in anyways, but yeah, marketing is the name of the game, right? I mean, that's I saw, I don't know if this was made by a sign at Jimmy John's or something like that one time, but it said a business without sales is a hobby, right? And so you think about that, and then what does that mean? It means marketing. And my dad spent most of his career in the grain business, and he always used to say they call them farmers or producers and not marketers for a reason. And it's just we've got producers, farmers are great at making stuff, and that's great. We can grow it, we can produce it, but we got to be able to sell it. And our experience through CoBank, my experience with our Co-op Start program, is what we call our startup patient flexible capital program. is that we've seen about a third of our customers that we've funded in that through that space fail, and that's for a host of reasons. But the ones that have made it generally have been marketing co-ops. Those that are very much focused on marketing, and that's been in a whole bunch of different commodities. We work with a hops marketing co-op. We work with food hubs, which are essentially a marketing co-op, right, of locally produced produce in most cases for the ones that we're working with. We work with an elderberry marketing co-op. So we've been in those, and I think not only is marketing just integral to a producer's business, but it's a skill set that many don't have, right? They're back to the point that they are producers, and marketing can take a whole different mindset in order to get a product out there consistently. The previous panel was fantastic when they talked about having product out in the market all the time, right? Being able to serve a market all the time, and that's really, really important. And you can't really do that. Most producers can't do that on their own. They need to band together through a cooperative structure, even some other structure, and maybe with producers that are in a different geographical area to get a product out to those users all the time. And I think the other part where we've seen in our program where we've seen the marketing co-ops be successful is because of the amount of capital it takes. I think in many cases, capital is always in short supply, and marketing is a service, right? There's not a lot of fixed assets. Just the opposite of processing. Processing is very capital intensive. Marketing doesn't necessarily have to be. And so, it's a chicken and the egg situation, right? You got to have product to sell, but if you can't sell, it doesn't matter if you have product. And so getting to a consumer is absolutely critical in our experience.
Great, thank you very much. And I couldn't agree more. And I think having those resources out there to help you get to markets is so important. Speaking of resources, I do want to go to Administrator Ducheneaux. Administrator, the Farm Service Agency is vast. I mean, the amount of resources that is under USDA. Can you give us a little more of an overview or some of your focus items that you would like to highlight in regards to the Farm Service Agencies specifically to capital?
Yeah, well, as we're all aware on the call, access to capital in Indian country and in other socially disadvantaged communities has been lacking for decades, if not entire centuries. And oftentimes Farm Service Agency is the only lender that'll go out there and make those loans to our producers. CoBank and the other farm credit system cooperative banks have sideboards within which they have a challenge getting outside of. Farm Service Agency can offer a lot of flexibility, really more similar to CDFIs. And that was really the inspiration for the IAC's creation of Akitan CDFI. We saw what Farm Service Agency can do in the case of primary loan servicing actions, which is when things go bad. And we wondered, well, what would happen if we started the relationship there? What if we extended ourselves as far as we could to begin with? I think we'd find, and I think Skya on here can probably tell you, that those producers have a lot more resilience because they're able to accumulate some assets to help weather those storms. So how do we move federal ag finance programs more into that realm of investment versus the borrowing and lending paradigm that we find ourselves stuck in? Borrowing and lending in agriculture really serves as extraction at the end of year one. And we've got to find a better way to do that so that more of that capital can stay deployed longer before we start to reap the return on that capital. In our other programs, we offer that safety net for producers, price support mechanisms. When disaster strikes, the USDA has a suite of standing disaster programs that most of which are administered through the Farm Service Agency when they're relevant to producers. Drought in the western half of the country right now, flooding in the southeastern portion of the country. our county offices are the front line of administering those programs on behalf of the federal government and helping support those producers as we work to improve the world of ag finance in a way that helps them be able to weather those storms themselves.
And for those who are looking to reach out to either farm service agencies or USDA in particular, what is your advice on how would I do that? Do I go local or do I go national?
Your first bet is at your local office. One of the things that we're charged with in this administration is to fundamentally change the culture of the Farm Service Agency. The USDA for the last 20 years has kind of sported a black eye, and the Farm Service Agency's actions earned it. We're trying to change that. We want to make sure that all of our producers feel welcome when they come in the door, not just folks that are maybe part of the big ag commodity type crops and livestock. So start at your local office. You don't get a very welcoming reception, then just send me an email and we will start to address that, because we're out to change that. And my goal is to make this an environment that's inclusive and equitable, and educate folks that might not understand the need to move that direction so that they can get their minds around it. And then the alternative, make this a very inhospitable place for folks that don't want to get along in that manner.
Thank you very much, Administrator. Why don't we go, everybody on this call and everybody throughout the world, we've all experienced pandemic issues with the COVID-19 pandemic. I want to start with Jackson. My organization, the National Center for American Indian Enterprise Development, we've been working with a lot of clients on helping their businesses get back, going through COVID-19, getting through any impacts. From the CDFI perspective, what are some of the impacts that you've seen to some of the businesses that the CDFIs work in, particularly in the agriculture businesses, that might be as a result from COVID-19?
Thanks, Chris. Good question. Taking us back to April of 2020, it was a grim time for us. Obviously, it was a grim time for the world. But for native CDFIs who are lending to people with sub 600, sub 500 credit scores, who haven't had a job in a while and banks turn away, whose businesses shut down, it was looking really bad. And our folks, we would say, were on the front line, and there was a lot of, it was a scary time. That said, we're fortunate that we have a lot of partners that stepped up and helped out to make sure that these not-for-profit lenders had the ability to extend terms for loans, even change terms for loans, and defer payments for people that were unemployed. And I think that was a big credit to their community, so that put less pressure on their communities. So I think they did really well. We just came out with a report that talks a bit more about this, and I'll drop it in the chat afterward. But I mentioned the PPP program was something that we think every native ag producer should have taken advantage of, but it wasn't something that was easy for folks to get for access, especially in the beginning. Of the larger banks wanted to deal with the larger projects. And if you are if you're a smaller native ag producer, you're not going to be a larger project. Coupled with the challenges of, I will say it, the previous administration didn't make it easy for the SBA to partner with native CDFIs to be lenders. There were a lot of hurdles, and most native lenders were prevented from being PPP lenders because they didn't have enough business in the past 3 years. And so that we have these vehicles that could have got PPPs out the first time around, made it really difficult. but that didn't stop native CDFIs, and native CDFIs partnered, and they grabbed some of their clients and they said, hey, we'll work with you and we'll find a different PPP lender, whether it's a larger native or larger CDFI, not native. And we're going to make sure that your business is good. And I think there are a lot of great examples that folks can point to, and we point to in this report. So I'd say, kind of despite a lot of this headwinds, native CDFI still stepped up, and partners like Native American Ag Fund in particular have also invested in native CDFI. So they had that flexibility to weather those storms. And now I think the good thing is we are seeing increased levels of ag lending demand that we haven't seen before. And I think, like I said, part of that is this is a growing industry that folks didn't know about native CDFIs or nonprofit lenders before. And now we're getting on their radar, and now there's increased demand. And so now we're looking to get more credit, more access to capital in the market, and look forward to partnering with everybody. So thanks.
Great, thank you, Jackson. And I think that's a great, some of what we've seen as well in the native CDFI during the pandemic of being able to be proactive and reactive at the same time to support capital, especially when folks might not be able to make their next payment, or maybe need some loan adjustments. I think that was I saw many CDFIs really stepping up to the plate and supporting their clients that way, even working very closely with tribes as they support their businesses. So Jason, let me ask you a very similar question, again, from a little bit of a different lens that you have as a regional bank or as a banker. What were some of the things that your bank did to support your clients during this time, and where do you see your clients? Are they continuing to grow, or are they continuing to have issues with the pandemic?
Yeah, sure. So, from a broader bank-wide, I guess, way to look at it, PPP was a big one, and I don't know. I think there were a couple of Farm Credit System entities, but very few of them. We weren't SBA approved lenders going into the pandemic either. And so when PPP came out, it was a mad dash. It was a scramble to try to get approved and get systems and processes in place. We don't have an SBA team. We don't have people that have done this before, and so. We scrambled to get a program in place because our customers needed a place to go to get PPP funds. They tried to go to community banks, and in some cases they were able to get in, some cases they weren't. So that was a big thing that we did to help our customers and our owners, right? As a co-op, our owners help them get access to that program. We were really, it was a scary time for us and for the bank and for our customers, I think, as it was for everybody. We were really fortunate that the groups that we serve, right? We serve agriculture, we serve food and infrastructure, two things that came in that are used all the time, right? And when I talk about infrastructure, our infrastructure that we serve is really rural electricity generation, transmission, distribution, and telecom, right? So broadband and power. So everybody's at home getting broadband service. So it was our customers' businesses had some challenges through there, especially those in the food business that had to switch demand, right? They went from, if they were serving food service to the grocery store business, that was hard. But they did pretty well. And I think as they got through those first few months, and there are still, some lingering challenges for some folks, but as they got through those first few months to say, trying to understand, is the restaurant business, is it going away for a couple of weeks, or is it going away for a few months, or going away for a year, right? And can we reformulate, can we repackage to hit a grocery store market rather than hitting, the restaurant market? And I think for our infrastructure group, which I'm not as close to, but they had to get used to the demand being in different spots, right? The electricity usage was going to be different. The broadband telecommunication usage was going to be different. But all of it, I think, turned out at the end of the day, it's been okay. In some cases, it's been really good for our customer base. And I'd say, if I zoom in a little bit tighter into the startup space, this co-op start program that I work with, I tell you, we've seen more demand for that service, that product, loan product, in the past 6 or 8 months than we saw in the previous multiple years together. And that's a good thing. It's not because people are, doing poorly, they need money. It's no, they're starting up new entities. So what we hadn't seen for a long time was really new cooperatives being started up. At least there are new businesses being started up, being started as LLCs, and Zach mentioned we've got some sideboards as part of the farm credit system. One of those is farmer-owned co-ops. We are limited at who we can work with. And we've seen in the past several months more farmer-owned ag co-ops starting up than we'd seen before. And I think the pandemic made people focus on their food systems more, right? I think we all got a little bit more hyper local. And it also gave, in some cases, people time to plan. They were less distracted. There were fewer things to go run off and do. And so they were able to get together and plan these businesses and take them that step further. So I'm excited to see, does this initiative continue on? Are we going to continue to see more? But there's some really fun ideas out there, and it's fun to see some of these come to fruition. One of the projects that we've funded earlier this year is a mobile slaughtering unit. And they've got the group set up 2 different sites in California where they're going to move this between, because there's a big demand. Everybody wants local meats, but these little locker plants are closing down. They're run, they're privately owned. They're run by somebody that's going to run them into retirement. It costs a lot for regulation to upgrade them. And so a group of producers banded together to buy this and set up some of the infrastructure. And so that's really fun. That's really exciting to see that. We're seeing more food hubs being put together to serve school systems and state and local governments. And so I'd say, while it hasn't been, COVID has given us plenty of challenges for a lot of our customer base and folks we've worked with. There's a lot of good things that have come out of it, I think.
And I think that definitely those examples that you provided at a regional and localized level of knowing where your food comes from and understanding supply chain disruption that we've all felt regardless of where we live, I think that's really important, and I commend that work, and those are great examples. Thank you. Administrator, I'm going to ask you a very similar question, but more now on the lens of federal government. And perhaps this will probably be our last panel question, and then we'll open it up. I see some questions in the chat that I'm going to ask you. But first off, Administrator, could you talk a little bit about, when you came on board, what were some of the provisions that the administration has put in place regarding the American Rescue Plan and other initiatives over the past 6 or 7 months that have helped support getting more capital and support farmers nationwide? Can you give us some from the administrative's point of view on what type of support you're providing?
Yeah, very early on in the administration, we took a focused look at the coronavirus food assistance program and identified where the gaps were in that program, and opened up a round of stakeholder engagement to find out how to better serve, how to get the funds out to a more diverse population than just those that you typically think of when you think of the United States Department of Agriculture. As part of the American Rescue Plan Act, we were charged with carrying out the socially disadvantaged loan repayment program. That's at a standstill right now with regard to making payments because of several different flavors of litigation. There's basically 3 different groups that are litigating, forum shopping all across the country, trying to find the judges to rule in their favor, and they've got us stopped from making payments. Our position is we're going to defend our ability to implement that program, and we're going to do everything that we can within the law and allowed by the courts. So we're continuing to send out offer letters, receiving those signed offer letters back in hopes that we can prevail and extricate ourselves from under the preliminary injunction that we're under. Since, for the last 2 months, a lot of our work has been focused on drought assistance. We've got unprecedented drought in many locations. Folks that normally rely on irrigation are having their irrigation rights just basically withdrawn. So how do they manage to get by till the next year? Hopefully when the weather normalizes. The secretary is out west today touring some of those drought affected areas. I know we've got similar cases in the Southwest, all up through the Northern Plains and into the Rocky Mountain region. We're trying to find the most flexibility we can within our existing programs to get those programs and services out to our customers out there in the community. And that's one of the things that I think is unique about this administration. We're looking to find that flexibility and exercise it to get the programs out, as opposed to finding ways not to administer the programs because of eligibility challenges or what have you. So we're really looking at pushing the boundaries and making these programs work for more producers.
Administrator, I commend you for saying that. I think the flexibility of the federal government, it's probably as flexible as a log historically. So really great to hear you say that sort of that out of the box thinking, and I commend anyone from the federal government that thinks that way to help support the client, because directly I think folks oftentimes don't hold our folks accountable enough, and I really commend that when to hear someone at such a high job as you have sort of take that responsibility and accountability. So we thank you. I want to ask, I have a few questions that came in from the audience. So I'm looking at the chat. I'll ask a few questions to various audience. Anyone can, of course, answer any of the audience questions, and then we'll go to some final thoughts after a few questions from the audience. So the first question is in regarding credit. Anyone that's been in and around the banking industry knows that how important credit is. But oftentimes in a lot of our Native American communities, it's not that we have bad credit, it's that we have no credit or limited credit in our communities. So one question is, what is there a way for folks to even reform a credit score, or is there some out of the box thinking around folks with limited to no credit? And I'll start with Jackson, because I know that CDFIs work a lot with credit, and would like to hear some of your thoughts. And the last question is, does anyone have any authority over the credit scores agencies? Because credit is such an important thing for folks to get loans. So any insight from Jason or Jackson or Zach would be great.
Cool, thanks. In credit, the way I think about credit and I think about Indian country is business in creating wealth. I personally, I don't think it is new or foreign to indigenous people, Native people. Farming, agriculture, Native people have been doing farming forever. And we've been building and growing these things and selling them to all people across the world. And I think that's something we should be proud of. However, when I think about credit, I think about leverage, I think about interest rates. These are things that are relatively new to most Native Indigenous people, a few generations into it. Really, since folks are talking about residential school systems and that sort, that's kind of around the time I think a lot of, I guess my family might have been introduced, but the interest rates and credit and all that stuff is not taught in schools, and it's expected to be taught in homes. And so therefore, I think our folks are coming to the game without the same background as other people, and other people take that for granted, I think. And so Native CDFIs are hopefully trying to help and step in and build up that financial literacy education that other folks take for granted. So that's a long way of getting to the question about tracking credit scores. I think tracking credit scores are kind of two sides. I was talking with somebody else, and they were saying, "Well, can't actually." I was in a hearing with the Financial Services Committee a week ago on Tuesday, and someone asked the Cherokee chief, Principal Chief Hoskin, is there something that we can do about getting rid of credit scores? And his response was, well, there in two sides. We need our folks to build up credit scores, and so therefore the Cherokee Nation has an economic development authority that is a CDFI, that they and other CDFIs provide credit building loans to folks, and they report these loans to the 3 private credit companies or a partner, and then reports them to the credit companies, and therefore they're able to build their credit over a period of time. And there are a number of good examples. I think a good example I know about is the Tiwa lending services out in outside of Albuquerque, New Mexico, runs a number of credit training courses where they've increased people's credit scores by 200 points. And that means they're able to get a home loan. That means they're able to save a lot of money for their families. And that's so, for better or for worse, a lot of native CDFIs do partner and provide these credit building loans that are that report to the credit bureaus, which are private. If you want to take us, if that feels bad, then maybe we should talk about the Financial Services Committee, and Maxine Waters has a new bill that out that I think would create a third federal credit reporting process that would be, I think, at the CFPB, Consumer Financial Protection Bureau, that would really push the private credit tracking companies out of the way. And I think that might stand a chance in the House, but I don't know what would happen in the Senate. I think it'd be pretty tough. But that's a conversation I think that needs to be had. So thanks.
Great. Any other comments on credit?
I'd talk a little bit about it. You know, one of the values of your community-based lenders like your CDFIs or your government-based lenders is we don't have to look at a credit score. Your community-based lender is going to get in touch with you and get to know you and use character more than anything else when they're using the 4 or 5 C's of finance. The government has the comfort of a broader risk pool. So we look towards your payment history more than your credit score. Lenders in the commercial industry have to use that score to monetize their risk. I think it's upside down. I think if someone comes in with a low credit score, we should find a way to help them and give them a lower interest rate, not a higher interest rate. The last thing someone needs when they've got a credit score of 512 is a 20% interest rate on a commercial loan. That being said, there's a lot of room to improve our financial industry. And we're going to have to start to treat that more like an investment than the borrowing and lending that happens as well.
Great. Thank you so much, Administrator. And we are running just a little bit of time. I think we have about 4 minutes left. I think Whitney will probably pop up when it's time, but I'm running low. But I do want to ask you one quick question on the American Recovery Plan section. This was a very specific question, but section 1006 of the bill talked about $1 billion in technical assistance. Is that $1 billion, is it tied up in the in some of the legal things that's going on, or is that $1 billion able to go to eligible farmers for co-op development?
So the folks that are advocating against the loan payments would like us to believe that racism doesn't exist in this country. That's a crock. Racism exists. And I don't see any possibility of us trying to roll out programs for socially disadvantaged producers without these same racist-driven entities litigating that as well. Be that as it may, We're going to do everything we can to get those programs out the door and serve those folks as Congress intended, because we understand, we know that it's real, and we're going to do our best to address it. But we're also going to do our best to address it within the broader suite of programs and services that we have the opportunity to administer.
Great. Thank you so much. So with our remaining times, I want to let everyone have maybe a closing comment or closing discussion. So let's start with Jason today on just any closing words for our audience.
Yeah, I'll just take a minute or so. So I encourage everybody, if you're thinking about starting up a co-op, to really lean into the experience of others. So technical assistance has been mentioned a couple of times, whether through CDFIs or through other entities. The country has a cooperative development center network. Not every state has one, but they get a grant from the USDA. Those are fantastic entities to help out, from feasibility studies, legal assistance, you name it, to help. The one in the previous panel, I don't remember which of the speakers, but talked about getting the right structure set up, right? Do things the right way in the front end. That technical assistance is invaluable there. And I know that's a real struggle for farmers, producers. That's my family history, and we like to do everything ourselves. But there are other people that are better at it than we are at some things. And so I'd encourage everybody, take advantage of the technical assistance that's out there. It's a low investment in the whole scheme of things, and definitely worthwhile. And then the last little soundbite I'd leave is, as I think about startups, I remember having a conversation with a founder of a very major dairy co-op a few years ago, and one that's very mission focused. And he said, "Hey, at the end of the day, Jason, you got to remember, no profit, no mission." So the mission is really important, right? But you got to support that mission. And the way that mission lives on is by generating a profit through your business. So take advantage of resources that are out there, and make sure that you remember that you're running a business and you're there to generate a profit, so that mission can get bigger and broader and live for a long time. Great words. Thank you, Jason. Over to Jackson. Final thoughts, about 15, 20 seconds.
Thanks. Utilize native CDFIs as a partner, whether you're an ag producer, go check them out. Whether you are a bank, CRA credit, let's make it happen. Whether you're a local nonprofit, connect with a local native CDFI, hopefully. If you're a national nonprofit, connect with us or one of our partners. So, and if you're a Fed, help us do your dirty work. Thanks.
And Administrator, over to you.
I'm going to plug our friends in the CDFI industry too. Go to the CDFIs. If you're an investor, get your money in a CDFI. They can provide you a great return while helping you move towards your mission. Foundations, philanthropies, get your money into these CDFIs, get it the hell out of Wall Street, and put it out there where it can work in your community.
Wonderful advice. Thank you so much, panelists, for joining us today. Whitney, I'm going to turn it back over to you, and have a wonderful afternoon.